As we enter the traditional home buying season, realtors remain upbeat about the current housing market conditions. Now, there are great reasons to feel good about this market despite rates rising high in the recent weeks. And with a strong growth in employment in March and a surge in consumer confidence to the highest level in the year, the economy is slowly recovering and life is hopefully getting back to somewhat normal here in the second half of this year of 2021. Tight supply, however, remains a concern as it continues to hold back demand and it continues to put pressure on affordability here in our greater Sacramento area and the nation as a whole. Hi, everybody. Welcome back to our channel. I am Tara Coyle with Coyle and Verberne Real Estate and Exp Realty. Now, before we get started, please don't forget, ring that button, hit the bell, and make sure that you are subscribed so that you never miss one of our awesome and informative video uploads. Today, what we're going to talk about is we're going to review the California Association of Realtors' latest market minute with data and information released from the close of last week. And we are going to talk about how this affects the United States market and the California market as a whole. Now, realtors, they're feeling upbeat about the market. And in fact, California realtors felt positive about the market as we entered the month of April. More than half, at 54.7% of them, expect sales to improve in this upcoming week, while nearly 7 out of 10 believe prices are going to increase from the week prior. Both of these measures reached the highest level since the California Association of Realtors started tracking numbers weekly back in July of 2020. And those who had a listing appointment also hit the highest level at over 40% since late August. 49% think that active listings are going to rise in the upcoming week, and new inventory is going to be a great thing for our region. Pending home sales, they hold back by tight supply. In fact, in the United States, pending home sales dipped slightly by 0.5% from a year ago after 8 consecutive months of year-over-year gains, according to the National Association of Realtors. Now, this tight housing inventories is the primary reason for the slowdown, as there was just over 1 million homes for sale at the end of February, a 29.5% decline compared to a year ago. But on a month-to-month basis, pending home sales were down 10.6% in February, with all regions showing a decline. And we know here in the greater Sacramento area that inventory is really tight, but actually our pending home sales are up. Consumer confidence hit 1-year high. Consumer confidence in the United States surged in March and reached the highest level since the pandemic started a year ago. This is great news, and the index increased to 109.7 in March, which was up from 90.4 in February. And in fact, this was the third consecutive month with a gain from the prior month. This higher than expected number surpassed even the top end of most forecasts by a sizable margin. Government fiscal stimulus, number of lower COVID cases, continued success in the vaccine rollouts, and the reopening of businesses are all contributing factors to this optimism. Now, while the optimism and the index remains below a pre-pandemic level posted in February of last year, the increase in optimism is an encouraging sign that we are moving in the right direction. Our job market is also continuing to make progress. With success in the vaccine rollouts, improving public health, and easing of COVID restrictions, our economic activities are starting to pick up and firms are beginning to ramp up hiring to meet increased need and demand. Employers, in fact, added over 916,000 jobs in March as the recovery gained momentum, easily beating consensus expectations. And hiring last month was broad-based, with almost all major industries reporting gains. In fact, the unemployment rate declined 0.2 percentage points to 6% in March of 2021, which is the lowest it's been in 12 months. But while the unemployment rate is still above pre-pandemic levels and there's a lot of ground to recover, our labor market is showing signs of a faster recovery than previously anticipated. All of this is great news for our housing market here in the greater Sacramento area. Now, mortgage applications, they've been moderate in recent weeks, but they do remain elevated. With a little bit higher rates cooling refinance activity, we saw mortgage applications decrease just over 2% from 1 week earlier, and the purchase index decreased 1% compared to the prior week. But it's still 39% higher than it was the same week 1 year ago, as purchase activity dropped sharply due to the pandemic. Our refinance share of mortgage activity dipped 3% on a week-to-week basis and was 32% down from the same week of last year. Now, our refinance activity continues to pull back a little bit as the pool of borrowers who can benefit from a refinance shrinks just a little bit with the recent rate hike. When we look at construction spending, we saw it decline in February, but it's still up year over year. And remember, this is a seasonal change. Severe weather has dampened construction activity during February as total construction spending fell 0.8%. On a year-to-year basis, though, we're up still at just up over 2.3%. Our residential spending registered a decline of 0.2% from the prior month, but it's up a robust 21% from a year ago. Single-family expenditures inch up just slightly at 0.1% during the month, while multifamily dropped 1.4%. Now, I know this was a lot of information, but I do like to keep you updated. And as always, if you have any questions, please feel free to reach out to here. I'm Tara Coyle with Coyle and Verberne Real Estate. And remember, we're happy to help and always make it a great home buying and selling day.